All right, welcome back to Yahoo Finance Live on this Thursday morning. Let's take a look at some trending tickers here as we get set for today's trading session. The meme trade back in focus, but not exactly for the reasons that the long-term holders here would like. AMC shares off about 4%, in excess of 4% pre-market trading. Stock yesterday fell some 15%. We've now seen AMC fall by more than 50% from its most recent highs. As we see air coming out of the meme trade, also have GameStop moving in sympathy here. And we see the longer-term trend, AMC off 40% in the last month. GameStop shares, they're off about 5% in the pre-market as well. That fell 7% yesterday. And that stock, while again, logging some nice gains so far this year, as both of these names are, GameStop shares are now down about 50% from their most recent highs in early June. And Sozzi, I think it's interesting to see the meme trade evolve here because, okay, both these names are sitting on 1,000+% gains year to date. But the last time we had a frenzy around this, we did a meme special. We had every day we led the show with what was happening with AMC and GameStop. We're 50% below those levels. And it's not like these stocks were at 50 in the case of AMC for a day. I mean, they spent some time at these levels. There's a lot of people out there who bought a lot of shares at AMC, $10, $15, even $20 above current levels.
Yeah, Myles, I'm just looking at AMC right now on the charts. I mean, the intraday high for AMC was over $72. And to see the shares now trading, down in the pre-market, down about 5% to 32. And there are a lot of people likely losing their shirts in AMC. Retail investors, probably some institutions stepped in there and tried to or envision AMC going a lot higher. And what is interesting to me, we have not seen that big blow-up day in these stocks. So they rose really in significant upside volume in terms of percentage gains. It's AMC, a GameStop, and many other memes, a BlackBerry, but their declines are drip, drip, drab, drab. 5% down this day, 5% down another day, and ultimately it still leads to these companies losing money. And I have to wonder if what we heard a couple months ago, Myles and Julie, where stimulus checks, there are no more stimulus checks. I know a lot of folks are writing about a fourth stimulus check. That's not going to happen. People are going back to work, and if perhaps they're just taking a break on trading.
It could also be, especially as you point out with this sort of drip, drip lower, maybe these people are looking at the profits that they have made and they say, you know what? I want to go to the beach. I want to take a vacation. I want to go out to eat. I'm serious. I'm going to sell some of this stock, take some of my profits and go take off. What's the point of riding it higher if you can't reap the benefits, right? So it could be that some of what we're seeing is some of that potentially.
And it was interesting, too. I'll just add as well. I mean, to see that the latest movie out of Disney do really well over the key July 4th weekend, and AMC shares continue to sell off. I understand Disney had a lot of strength in direct to consumer, but still, people went back to the theaters, and they likely went to AMC theaters.
Well, but I think that data it's kind of masked off here. I mean, it's not a fundamental story. Like, it's a fundamental story, or it was a fundamental story at 9. When it's like, is AMC going to go out of business or not, right? We had Rich Greenfield on. He's got a penny price target. He says AMC is going to go out of it, or, the equity will get wiped out. There'll probably be feeders, but the equity is going to get wiped out in Rich's view. And I think the market determined that was not going to happen earlier this year. But that was even $25 per share ago, right? So again, in the single digits, that fight was happening, the fundamental fight. At 32, it's all momentum, it's all sentiment, it's all take your gains and go to the beach. And also a reminder here, obviously retail is a big part of this, but there are big players involved in these names. The gains are too large for hedge funds, prop shops to not be involved. And as they leg out of their positions, I think maybe that's why you're not seeing one-day blowups, right? You're sitting on, a couple 100 percentage point gains, your hedge fund. You're okay legging down those gains. Maybe the gains don't end up as big when they're realized, but the important thing is to realize the gains rather than have the largest, paper number. And so you're deliberate about exiting the position. And so that's how, you get action like this. And just to wrap up some of the other meme names we've seen on the move. Virgin Galactic's down another 12% yesterday. That's down in pre-market trade. You go through some of these names. Palantir's off 4% yesterday. Workhorse off about 7%. Clover Health off 3%. That stock back below the $10, break the buck SPAC level. And granted, a lot of these names have goofy 52-week highs, and so these are tough comps. But in terms of the losses from these highs, Wish is down 70% from its high. Rocket Mortgage, 60%. BlackBerry down 63%. Bed Bath & Beyond has been cut in half from its 52-week high. So there's a lot of damage that's happened underneath the surface of this meme trade. Notable that the market continues to kind of let that sideshow happen over there. All right, let's turn to another name not in the meme trade, but is related to content, perhaps. GameStop, maybe that's the segue here. Netflix reports last night the company making a major hire, hiring Mike Verdu from Facebook, who had previously been at EA, as Netflix looks to beef up its video game push. And, Julie, Reed Hastings has for a long time talked about how Netflix's competition, of course, it's Disney Plus, and of course, it's HBO and all these others. But he's talked about sleep as a main competitor, TikTok a main competitor. It only makes sense that Netflix might try, and video games part of that, to use its own IP to build out some of its own video games. And I'll be curious to see how far they take these ambitions. They certainly have the capital to go after something like this. How serious they remain, I will be quite interesting to see.
I guess Reed Hastings can't yet hack sleep, so he's got to try to go after one of those other categories. And gaming, I suppose, makes the most sense if you're talking about some sort of subscription model. The question is, and yes, they've had this first hire, when it comes to gaming, it's as much a war for talent as it is in Hollywood, right? As it is in signing Shonda Rhimes, for example. And so it's going to be interesting to see on the programming side what Netflix develops or does it acquire, kind of what makes the most sense on that front. Because for the gaming community, it's really all about that, the quality of the games. It can't, I think that the strategy that Netflix has gone with periodically on its content side, which is to sort of throw everything at the wall and see what sticks. I don't know that is going to work if they apply that to a gaming model. We'll have to see, but it doesn't seem like that is really the way that it typically would go. So we'll see what happens.
Myles, you would appreciate this comparison. I'm wondering right now if this news out of Netflix is akin to that Amazon buying Whole Foods news. Like, where does the ripple effect go from here? I'm just looking at some numbers now. So I went over to Activision Blizzard. They're a major player via their King Digital business and their Blizzard business in terms of in-game download. Just last year alone, they pulled in close to 270 million monthly active users just from folks downloading not these packaged goods, or it could be in-game content, it could be online games, so a very big business for them. I go over to Electronic Arts. Last year, for the fiscal 12 months ended March 31st, they pulled in almost $1 billion in full game downloads. And I'm not saying because Netflix announces something, suddenly all of these revenues completely disappear for the biggest game companies, but there are question marks. Does Netflix work with these companies to get these games on the platform? Do they create their own content? Do they go out and buy a Zynga? Worth noting is the person they have hired for their games division, he did spend a lot of time in Zynga. He also ran creative for Atari, believe it or not, in 2002. So that's an interesting nugget as well. And of course, what is the ramifications to GameStop? GameStop shares are down here in the pre-market. This is just another validation that over time, really, there is no place for a company like GameStop in this industry. It is going to full game downloads. This is happening. GameStop investors, hopefully for them, they start to realize this.
Yeah, I think, Sozzi, to the Whole Foods comparison, with Netflix, there's always been this conversation about what would be next. Would they do ads? Would they get into news? Would they get into sports? Would they get into something live? Because they've basically just done Netflix for the last several, decade and a half at this point. I feel like they're probably going to sniff around this and be like, games are hard. That seems to me the most likely outcome for a lot of the reasons, Julie, that you outlined that make it, what makes a game great, what is expected among loyal fans, what actually moves the needle in terms of a business built around games and what that would look like for Netflix to continue to invest in it. I suspect that's the most likely outcome here, but you might as well kick the tires because there's a big TAM. Love big TAMs, big opportunity. But I think the interest here is really, maybe Netflix does something new, tries something else, and we'll see how serious indeed they are about pursuing that line of business.